And as we get ready to enter into a new year, MikeMartin is with me. Mike?
Good evening, Bill.
Mike, you've got like 10 years of experience in all things financial, advisory capacities. You found the firm way back when. Tell us a little bit about your firm.
Thank you for having me tonight, and I want to wish everybody a happy new year and a warm one at that. Mm-hmm. I started Marius Wealth Management about 2 years ago, and I did it because, well, I thought there was a better way to help people invest their money and to manage their important futures, that is, their retirement. I came from the big wirehouses. I worked for Smith Barney for about 6 years. I was a VP, private client group there. And then I went to work for Wells Fargo some years later. But in doing so, we saw the good and bad of working for the big wirehouses. Yes, lots of resources. But I thought, in a lot of ways, there was some conflict of interest. A lot of the tactics, so to speak, were very much sales, commission-driven. But I always wanted to start my own wealth advisory, so we started Marius Wealth, and we are effectively an independent advisor. And what that means simply is that we're fee-based. We have fiduciary responsibility to our clients. The key benefit is that unlike some of the big firms out there, we're not restricted to any investment products or services. We don't have a limited product architecture. We don't sell on commission. So again, we're obligated to put our clients first, our clients' interests first ahead of ours. And that's what we do. And we do it very well.
As we head on into, Mike, the end of this year, the beginning of the next tax year, how can you help people, investors, lower their tax bills this year?
Well, that is a great question, and there is not a lot of time to do that since we're coming to the end of the year, Thursday night. But one such strategy is called tax loss harvesting. And as I said, you still have time to do this. And it works like this. Investors should review their portfolio consider selling a long-term holding in it that's down and offset these losses with any capital gains they may have this year. And the market did pretty well, so there should be, or we hope that there are some capital gains. For instance, if you are diversified and you have some losing stocks in your portfolio, good old Uncle Sam will compensate you for part of that loss. If you happen to have more losses than gains at the end of the year, you can use them to lower your taxable ordinary income up to $3,000 a year. And those losses you can actually carry forward indefinitely, thus lowering your tax bill for future years. So that's a key point, but it's not as easy as that. I tell clients that when they do sell a losing stock to offset capital gains, they should immediately replace the losers with a similar type of investment. But make sure that it's not one that is identical in nature, and we can go into this later. This way you're not on the sidelines. Get the whole sector, and hopefully your new investment starts to rally. Now, the IRS has a little rule called the wash sale rule, which restricts you from buying back that same security that you just sold for 30 days if you want to keep that tax break. But there are some easy and valid workarounds. For example, if you sell a company in the oil sector, and like today, the oil sector has taken a crushing this year, so you may have some losses in your portfolio. Well, you could replace that investment with a similar company in the sector that has a slightly different business model, such as a broader-based energy fund or an ETF. But before you make any move like this, and you have time again, I encourage investors to speak with their tax and financial advisors about the year-end tax situation and whether the strategy is appropriate for them.
Before we run out of time, with MikeMartin, investment advisor, Marius Wealth, tune-up, what's a good key point of fact for people, Mike, that have 401k programs?
First and foremost, Jim, I tell investors that if they haven't done so already, take a look at their quarterly statements, their 401k. Very important, because most people take a set and forget approach to 401ks. And, in doing that, I think what they're doing is neglecting and really ignoring, some very important aspect of their retirement, and that's their 401k. So I encourage people to at least once a year or twice a year, call up their plan administrator, review their asset allocation, talk about their risk tolerance, and make sure that the plan that they set in place is still aligned with their goals. The second thing, and very importantly, is review your mutual funds. Look at the fees that you're paying for the funds and for the plan. Every plan at a company has associated fees with it. A lot of plans, you'd be surprised, have very high fees. So it's important to monitor those fees and also, again, look at the performance of the funds. People just, they get busy, they're overwhelmed, they have work to do. They just, they set their plan, they figure, it's with my company, it's okay, I'll be all right. Well, that's so far from the truth. And people really do need to, stay in touch and manage those portfolios like it's any other portfolio. Key issue, especially since this is money that they and their families will retire on in the future.
Wow. We're just about plumb out of time, and you mentioned keep in touch. Mike, how can people get in touch with you and Marius Wealth and get this information?
Yeah, Jim, I can be reached. I have a website. It's mariuswealth.com. It's spelled MARIUS wealth.com. Or you can reach me at 646-454-9159. I also write a financial blog. It's called Marius Wealth Blog, and it'll describe in detail a lot of what I just covered and a lot of other subjects, and that's mariuswealthblog.com. So either three of those you can reach me, and I'd be happy to answer any questions that anybody has.
Well, we appreciate the good information and wish you and your clients a prosperous new year. MikeMartin with Marius Wealth. Thanks so much.
Great, Jim. Same to you, and Happy New Year to you and everybody else out there.
Thank you.
Thank you.
You're very welcome. Let's get your WICC 600 traffic update.